And in terms of what the investors are doing in May, almost equally investors were putting money into equity ETFs and fixed income ETFs. Now there's been a little reversal of that on the fixed income side in June. What do you think is happening on the fixed income front, and can you project out what might happen in the next couple of months when we are at least talking about interest rates going higher? It's not going to happen to next year, but that's the talk now, is preparing for it.
Yeah, so the drivers of what causes people to use different types of ETFs is political, economic, and even weather. So we've seen when Hurricane Sandy was coming, people adjusted exposure to U.S. markets. Many people this year were concerned about Fed tapering. So when it wasn't sure what was going to happen and what the impact would be on the market, we saw a lot of money in the first month, January, going into fixed income ETFs and money coming out of equities. So what you're finding is, depending on what's happening, is because ETFs cover all markets around the world and all asset classes, the movements are really driven by investors either seeing that they want to take money out of that exposure or they want to put money into that exposure. So I think what's going to drive it is the expectation of what happens with employment and the other drivers of quantitative easing, both in the US as well as what's happening in Europe and Japan. Clearly, what's happened in Japan has seen many investors over the past year put money into Japan. And so right now, I think people are looking at that. They're looking at what's happening in China. So we've seen a bit of money go back into emerging markets. So that's the beauty of ETFs, that you have large, very sophisticated institutions using them. So the fact that you can see within 5 days of the end of the month where investors have moved their allocations is a very good indicator of what's going on in the markets. I don't have a crystal ball, so I can't tell you where to invest for the rest of the year. But I think the investor sentiment is actually quite positive now. The fact that we see people putting some money into governments, which are quite safe, and also putting money some into emerging markets again, shows that investors are reallocating, putting money back to work. And many investors are following some of these retail investment advisors are now building entire portfolios that use ETFs either for target date, risk managed portfolios, or tactical asset allocation. So you can actually go and find someone who will help you allocate across all asset classes and all markets without you trying to figure out where, when, and how should you adjust.